Hey Syndicate members, Akil Stokes here as always for your viewing pleasure. Today's Syndicate video is going to be a little different. Usually I'm running through the chart saying, hey, this is what's on my radar for the week. This looks like a good opportunity. Today's actually going to be some training, and I actually didn't even go through my higher time frame analysis yet. I've been busy all day, but we had a great training session this morning for those who are in the 12-week transformation, dealing with reading a price chart, structure, the prediction part of the IPDE: identify, predict, decide, execute. And well, I want to share that with you guys as well. Uh, but before I get into that, I do want to check up on some of the trades we had on the table for last week. Let me get this out of here. Remember, Jason and I think I did a video on Friday. I think Jason brought this up as well in our syndicate form, if I can find it. It was, where are we at here? Wait for it. Too many patterns. Here it goes. A euro dollar. It was a bat pattern on the euro dollar. And if I bring this pattern up, let's go over to euro dollar. You can see that that completed and rolled over for targets this morning. Now remember, we had the Gartley pattern from last week. Some of you guys actually identified a cipher as well. The cipher is going to be easily seen on the 4 hour. I don't even remember where it came from. I think it was something like this. I traded the Gartley and not the cipher or the bat, but we broke down this pair a lot between the syndicate and the live room. But anyway, we had our Gartley pattern that rolled up for target ones. Now we got our bat pattern that we put on our radar on Friday. You can see that nipped completion this morning, actually getting my second targets, getting many of our second targets hit. And we rolled over to our 3D2 retracement, taking from our A leg back to our D leg. And you can see target one hit on that as well. So a pretty good back-to-back here on euro dollar. Another one I want to keep you updated with was, let's see, pound Swiss. We're just channeling here. Pound Swiss is that big 4 hour trade. If you guys remember, nothing special is happening there. Let's see. We still haven't rolled stops yet. Dollar yen. Can't show you guys all the good and not the bad. Dollar yen involved in this cipher pattern right here from, I think, again, sometime last week, down about 37 ticks, but nothing too major. Want to make sure that we adjust our fibs on this for target. So our original entry was here at 98.26. We want to make sure we adjust our fibs up to our highest point of this D leg, and then adjust our targets accordingly. Uh, Pound yen, here's the one. Pound yen, we're very, very close to getting target twos hit on pound yen. This was a bigger cipher pattern as well, as you can see right here. Again, this was from last week. We're up about 230 pips right now. Can't take targets off early. You know, you probably want to. You're saying, oh, 230 is the biggest trade I've ever been in, all that fun stuff. But you got to leave it on. Let the market play it out. We can do this, however. Because we got a higher high, higher close, piggybacking off the training we've been doing, we can roll stops up beneath this structure level right here. If this trend is going to continue up, if price action is going to push up to our second targets, this outside return right here at this level 56, 66 shouldn't be broken. So we can get stops right underneath that. And, you know, worst case scenario, if we do come back and the market shoots straight down, and you know, at least we have what, still 100 pips in the bag, 110 pips in the bag. So want to recap that for you guys, just some trade management stuff. And what I'm going to do now is going to flash you over to a portion of this week's, or a portion of this morning's, I should say, training for our 12-week transformation members, those who are taking that course. And it's basically some structure analysis on New Zealand dollar. I got the question, how would you analyze this? And it's just a great lesson. And well, I'll let you guys check it out for yourself.
I do not try to involve myself in opportunities where I don't think I have a really, really good chance of winning. Finish out your prediction on this trade. Let's see what did we just do? We just put in a lower low, lower close. So if I were to make a prediction, I would say that we're looking at a bearish rotation. So I would say this: the market's going to retrace somewhere up here. We shouldn't break these higher highs or these previous structure highs, and that will most likely continue down into this area. So I would think bullish. I mean bearish. I would think bearish, bearish, bearish. If the market came up here, I'd be looking for an opportunity to take a short, meaning I'd look to sell somewhere in this area around this previous structure, get stops right above here in anticipation that the market's going to continue down. Maybe put in another equal harmonic move. We also have a potential bat pattern here as well if we do come down. But when I see this lower low, lower close, you see my blue line and how we got a lower low, lower close here? This is telling me bearish rotation, bearish rotation. You know, I don't have confirmation yet, but this is telling me think bearish, if anything. So I'd watch market closely. I can do something like this for you guys that have the DSR levels. I can bring in my DSRs. If price action comes into my DSR level, so this red box, then I will look for whatever entry reason I need to take a short. So again, identify what happens. We identify. What do we get? Lower low, lower close. What does that tell me? Potential bearish rotation, right? Predict. Well, my prediction is that the market's going to continue down, but first we'll probably get an outside return. So either we'll go straight down to this previous structure level, or we'll get an outside return that comes somewhere in this level. We don't have a bump in here, so I don't have a true level to tell, but we should get an outside return, and we know that our outside return should not penetrate our previous structure high. Decide how am I going to enter. I can say, well, if price action touches 83.75, I sell aggressively. So now I've decided what I'm going to do, and then I just have to execute my order. You guys follow me with that? On that process? Yep. 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 Cool. I'm late on some of these questions, so I apologize. Um, I'm not sure if you're talking about this I'll use an extension here to predict where this market may come to. So if I'm saying, say I get short and I'm trying to predict a target level, I would use a Fibonacci extension from this swing high. This is right here. This swing high to this swing low and back up and predict, well, the next stopping point may be a 127 or a 1618. That's how I would use the Fibonacci extension tool. I'm not sure if that was referring to this question, John. Um, that's how I would use it on here. But I'll use a combination. And you guys, I don't use any one thing. I use a combination of everything. So I like to look for harmonics, fibs, and structure. So in this case right here, if this were going to be a harmonic move, this swing high to this swing low, I would take that, I would drag it on there, predicting that, hey, if we extend an equal way, we'll come down to 83.46, whatever that is. Then I'll take my Fibonacci extension, swing high to swing low, and back up, and I'll say, what do you know? Look at that. Our harmonic move lines up right at our 127, and I put it all together. Can you show us how to calculate your target 1 and target 2 when trading short in this example? I would use the Fibonacci extensions, Ronald. I would use either structure or fibs. So I would either, if you're a structure-based trader and you're going short, I would look at, where the next structure is at, structure zone's at. We have structure right here. That could be a target level. We have structure over here. That can be a target level. If we keep going down, we have structure way down here. That can be a target level. Or if you're using Fibonacci's, you could use a Fibonacci extension, swing high to swing low, and back up and say a 127 extension could be target 1. A 1618 could be target 2. We can even bring in a Fibonacci retracement from our previous move, our swing low down here to our swing high, and say, look at that, we have a 382 from our swing low to swing high. That lines up right with our 127. Two Fibonacci's in the same point. We have a Fibonacci extension and a Fibonacci retracement and a potential harmonic move all in the same area with structure looking left. is this the best area to take targets? Basically, guys, target taking is no different from predicting a next trade. If you were gonna predict where the market's gonna go next, would you guys say this is a good turnaround point? This is where the market's gonna run into trouble, I guess you can say, for lack of a better term. Is this the next potential reversal zone right here? Yes or no? What would you guys say? Yes, right? So if you're in a short opportunity, do you want targets beneath that area? Maybe not, right? You don't want if you're predicting that the market's most likely going to reverse here, you don't want targets below that area because then the market's going to reverse without you taking profit. So the same way you would make predictions for a trade is the same way you make predictions for targets. This is the next reversal zone. Let me get targets here. I want to get some money in my pocket just in case the market decides to reverse. So picking targets is no different than picking basically another trade.
So as you can see, the New Zealand dollar trade played off just as we predicted. Price action came down to that Fibonacci level. That was also, let me draw this on, a harmonic level as well with this ABCD pattern completion. I think we got a little fancy and drew what? A 786 from down here? Yep, 786 and 382. Yep, and 382. We had a big fib cluster and market harmonics, and basically everything laying on the table to tell us this was the area it was going to come to. So it played off pretty nicely. But what you want to remember, guys, is this is why we're not greedy. We talked in the live training session about, when picking targets, it's no different from doing analysis for your next trade. If you're short, if you're in a short trade such as this, you're asking yourself, where is the market most likely to stop at and potentially reverse again and maybe go long, because we want to get targets off before that. We don't want to be superheroes. We don't want to be the ultra trader and shoot for targets all the way down here just because it makes us feel macho and we all want that big home run million pip trade. No, that's not our job as traders. We want to get in the market at a high probability level, a place where, again, the money is just waiting on the table and the market's telling you, I am going to reverse. And we want to get out at that same level, just going the opposite way. We want to put our money in our pocket. We want to roll our stops to break even, and we want to get out. If we get those bigger targets hit, then that's great. If we don't, well, we've still made profit on the first half of the trade. So again, I thought that was a pretty important training lesson this morning, and you can see it ended up just how we predicted it, at least for the first part. We didn't continue down, but we would have had targets off at target one. So until next time, Syndicate members, plan your trade, trade your plan. I'm sure I'll be doing more videos throughout the week, showing you guys what's on my trading radar. But I hope you guys enjoyed this training lesson. Take care.